Come fly with me, let's fly away.
Hi, my name is Jax Petty. I'm a real estate attorney and I've been helping people to do seller finance transactions for 14 years. There's a huge demand right now in the market for seller finance. We have a unique situation in that there is a group of sellers that want to sell their properties and a group of buyers that want to buy those properties. But the lenders have created a situation where that is not a possibility. Out of the 64,000 people a year, roughly 10,000 of those are getting into homes. So since 2008, that number has been building. And once financing does return, you'll see that there will be an increase in prices fairly dramatically based on the information we have today. Now, in order to do seller finance, you need to understand some of the pitfalls, or more specifically, you need to work with people that do. It's like anything else. If you know how to do it, it's easy. If you don't, you can have problems. For example, did you know that the majority of transactions that are closed are committing RESPA violations under the new guidelines? You want to work with somebody that understands how to make sure that's not a problem for the seller. Also, you have a situation where there may be certain parts of the real estate purchase contract that need to be crossed out or deleted based on the type of documentation being used in the seller finance transaction. Now, there are three basic types. First, we have the lease option. It is the weakest for the buyer and the strongest for the seller. That's another type is called an all-inclusive deed of trust and note. It is by structure strong for the seller and weak for the buyer. Between those two, you have a contract for deed. As part of doing a seller finance transaction, you need some specific people on your team. One is a realtor that understands how to negotiate the transaction and put it together to succeed. Another is a lender. The lender's critical because you may think you're doing this because you don't need a bank, but at the end of the day, you're more than likely going to want somebody that understands the benefits FHA provides to somebody doing a seller finance transaction and financing out at the end. You also need to make sure you have a credit solution that is viable, one that charges an upfront fee. Now, the reason I like an upfront fee is because if you're going to pay me until I do my job, that's not a good motivation for me to get it done quickly. Trust me, as an attorney, we love billable hours. And if we could set up scenarios like that, and attorneys often do with credit repair, that's what we would do. But there is a solution that will do a one-time $4.99 fee and do a very good job of fixing your credit. Now, the last thing you need is an attorney. Now, you need an attorney that will help you to put the transaction together, not one that will take it apart, one that understands the pitfalls and liabilities, and that can custom draft the documents for the specific needs of each transaction. The purpose of this website is to give you a foundation, a basis for understanding seller finance so that you're comfortable with it. You'll find it's nothing new, it's nothing nefarious, and it's something that if you want to buy or sell your house or be successful in this market assisting people to do that, that you need to understand.
Hi, this is George Anderson. I've been in the mortgage business full-time since 1989, and it's just a privilege to be associated with Jax and Clark here. The one thing that I wanted to bring out on the lender component of seller finance is that the contract for deed structure that you're going to have an opportunity to learn more about is not new. FHA has a handbook or a guidebook that's known as the 4155. It talks about all of the mortgage credit underwriting guidelines that FHA permits, and I would challenge anyone to go back into one of the oldest versions of that handbook and show me where it does not address contract for deed. Back in the 70s and the 80s, this was a very popular mode of finance, and just like so many trends that we see with fashion and everything else, the things that used to work back in the old days are coming back again. The challenge again is finding the players that can support and work with you in getting those transactions done. One of the benefits about the contract for deed is that it's actually laid out by FHA the proper way to be able to do this. When it's done properly, it complies with FHA guidelines, with RESPA, with IRS guidelines, and with all of the Board of Realtor and state guidelines that you might have that would apply. So it's a good transaction to have a lender understand how to structure it, because ultimately you're going to want to unwind the transaction and use FHA as a means of paying off the underlying obligation that the seller is still carrying. So some of the advantages of using FHA is that, number one, the loan to value on refinancing with a contract for deed is actually higher than it is with a purchase transaction. So the buyer can get in with slightly less money than they could if they were purchasing the home. Another advantage is that the buyer can, through documenting through canceled checks and receipts, can make improvements to the house that might have normally fallen into either a 203K type of category or just not allow the house to be financed at all. And that money that is spent on the improvements can be used and converted dollar for dollar into down payment at the time of settlement, which might occur 90 days later or 2 or 3 years later. So there's some very distinct advantages with using FHA. And your lender, if he's invited you into this website, has done so because they're confident and competent in their understanding of how to structure these transactions. So having a good lender to work with on this is critical. So good luck working with these transactions. This is the wave of the future. If you can understand how to do this stuff right now, you've got a huge advantage over your competition, and this is just a great opportunity to position yourself in a trend that I think is going to be going on for several years, maybe even a decade to come.
Hi, this is Clark Harvey with Envoy Mortgage. Thank you for listening to Jax and George and their systems that we have put together. I've been in the lending industry since January of 1998, and I'm going to talk about credit and why that's such an important role in today's world. As you know, we've had unprecedented short sales and foreclosures. People have had their credit damaged, and we have a system to help them with that and to be able to buy their next home sooner than they think. And what we're going to do as a lender is to evaluate why they need the credit system, if that's the case. Or if it's an income issue, then we're going to fill that hole as well. Why the need for a lender? What's the point of having a lender in this process? That's a great question. To answer that question is, we're going to evaluate the holes in the transaction, whether it be a credit issue or an income issue. There's many of self-employed people out there that would love to buy a home or sell their home because, in fact, if they sell it, they may not be able to buy the next home. We're going to address that issue as a lender and see and evaluate how we can help them, whether it be a 6-month time frame, maybe it's 2 years. We're going to see and fill that need. We're looking at helping these people as a long-term solution. And some of these are short-term solutions. The credit system is a phenomenal system. Now, I don't know if you're aware of the statistic right now. 25% of the population have a 599 credit score or lower. We believe that that will be 40% when the dust settles. That is a huge, huge amount of people that are not able to buy a home right now. We have the system to help these people and to help you if you're in that situation. We handle these delicately with everyone, with the utmost care and confidence that we have with you. We appreciate you listening to our system that we have, and watch for more information to come.
One additional point I think that is critical that needs to be made about the credit restoration process. The credit restoration industry, just like the banking industry right now, is under a severe amount of pressure, litigation, and regulation. The key to having a lot of success is to have a partner that has positioned themselves to defray some of those regulatory costs and continue to offer a service that's affordable and effective in all 50 states. The reason we've chosen to work with United Credit Education Services is because of their affiliation with a federally chartered credit union. If you look at all the regulations that have come down in the last several years, attorneys and federally chartered banks are getting all of the exemptions from there, and you're just not going to find too many corner credit repair places, as competent as they may be, that can circumvent or comply with all of these new regulations that are kicking in. Those that do are going to have to pass those costs on to the consumer. United Credit Education Services has been in business since 1997. They have an A rating with the Better Business Bureau, they have a money-back guarantee, and they have a proven system that works for their clients. Also, the pay structure meets what Jax was talking about as having a one-time payment where the client is committed. How many of you, if you paid in advance for a 1-year service at Jiffy Lube, wouldn't be bringing in your car every 60 days or every 90 days to make sure that it was taken care of. Whereas if you have to pay for it on a monthly basis as a consumer, you might let that car go a little bit. So we've seen a system that works. We've put dozens of clients into the system. We've gotten the results from it, and it's something that can actually turn what could normally be a marketing expense for real estate agents and loan officers and create a separate profit center that we think is very lucrative, and it's going to stand the test of time and all the regulatory and obstacles that are going to be thrown in the way over the years to come.